Hello guys. So this video is an addition to the tutorials to describe the missing piece that I have been talking about. So I have been using the box system for more than 2 years and I thought I knew quite a bit about it till this year. I started this year with all the volatility. Something felt missing. I didn't really know exactly what it was, but I knew that something needs to be discovered. And I think I found what it was. What it was right in front of my eyes. It wasn't anything complex. It was just the addition of the 21MA to what we used to do before. So we're gonna use ES1 here. I'll show you multiple examples of what I'm talking about, but let me first describe what I'm talking about. So I have always said 9MA is the short-term momentum filter and the 50MA is the long-term momentum filter. What does that mean? That means that when price is above 9MA, we have short-term bullish momentum. When price is below 9MA, that momentum has started fading. When price is above 50MA, we have medium-term bullish momentum. When price falls below that, that momentum is gone. What happens between these two is the 21MA, which is a balance zone. So when price ends up falling below the 9MA, what usually ends up happening is it will get some form of reaction from the 21MA, because that's the balance zone. That's the area where price goes from short-term, from like complete transition from short-term bullish momentum to short-term bearish momentum all the way to 50MA. So as soon as price comes to 21MA, it usually sees a reaction. And then that reaction ends up having two possibilities, which I will show it to you. And that was the difference maker. So let's see what these possibilities are. All right. I will pick up random examples from ES. We can also look at them in smaller time frames later. It's all good. So let's see with this. Okay. Let's see in March what happened. So in March, once price was above 9MA, before I continue, in my charts, the black is the 9MA, the red is the 21MA, and the orange is the 50MA. So I hope that leads to no confusion. So once price dropped below the 9MA, it started moving lower, and it came to the 21MA. And that's where it formed the first lower low in order to bounce and go back to the 9MA. It's only after the rejection at 9MA and after that, when price broke below the 21MA, there it came to the 50MA. The other possible scenario in this case would have been price goes above 9MA, goes back to these recent highs, and then tries to break out from what we can call a 21MA box. This kind of action continuously happened on 5-minute candles on Friday when it was crazy squeeze. So that's the possibility I will show you later. So this is the first possibility. We come to the 21MA, we bounce, we create a lower high around the 9MA, reject, and then we go to the 50MA. If price had moved above 9MA, then we would have made a 21MA box that sometimes they break out, sometimes they fail. I will show you an example of it in reverse. So, okay, in this case, the first lower low, lower high. After that, we consolidate. Then we have this downtrend all the way from 4375. We make the first lower low here, 4196. First lower high around 4300. Then price goes back, makes a second lower low. Okay. Then it makes a second lower high. Then it tries to go into the parabolic phase. It fails. So in this case, at this time, the 9MA downtrend is over. What happens after that? Once the 9MA downtrend is over, price tries to bounce. And where does it bounce to? The 21MA. The first 21MA, the move to the 21MA after the 9MA downtrend is over, usually sees some form of reaction. So in the previous example, we saw the reaction and price had bounced from the 9MA. In this case, price broke below. So that's the opposite example of what. So this was the scenario 1. Price bounces to 9MA and then keeps going back in the same direction. This is the scenario 2. Price comes back to the 9MA but does not bounce from here and continues lower. Now what we have is a 21 MA box. You see this? I will draw the box for you so you guys can get a clear idea. There is a 21 MA box. So when you have this 21 MA box, in this scenario, because price was so weak, it broke lower. Okay, we have the same 9 MA downtrend again. Lower low, lower high, second lower low, lower high. Alright. Then what does price do after this downtrend is over? Goes to the 21 MA, again rejected this time, tries to break another 21 MA box, but this time it fails. So you have to realize 21 MA boxes have the highest chance of failed breakouts. This is something we saw with the CPI report, I think a couple weeks ago, when we dropped in the pre-market quite a bit and then had a massive rally. 21 MA boxes have the largest chance of a failed breakout. So here we have a failed breakout. Then what does price do? This trend didn't work, so we'll go back to the 21 MA. And this time, price goes above 21 MA. So what will happen is we'll go to the 50 MA. Similar example, just the opposite of it. Because this one is in a downtrend. So let me give more examples. I hope it's starting to become clear. Once 9 MA downtrend is over, price will come to the 21 MA. It will see a reaction there. Those reactions will end up in two possibilities, in three possibilities. Either we go back to the top, the recent highs, or the recent top that we had for the 9 MA trend, and then break out there. So that's a 21 MA box breakout. Or we have a failed breakout there. Or we just get rejected from the 9 MA after having a reaction from the 21 MA. So I will point out this first example, the one on 6th April. Let me see if I can point out an arrow. This first example here, that's scenario 1. Lower low, go back to 9 MA, we reject, go to 50 MA. This case is scenario 3, where we have a proper breakout. Oh my God. Here. So this one is scenario 3, where we have a proper 21 MA box breakout and a proper trend. And this one is scenario 2, where we have a failed breakout. Reaction from 21 MA, go to 9 MA, rejection. Reaction from 21 MA, we go back to the edge of the recent trend we had, and then we break out. So 21 MA box breakout. And then the last one is, in this case, where we go back to the edge of the box, but the breakout fails. And that's a failed breakout. In that case, we have a very high chance of going back to the 50 MA. So these are the 3 different scenarios. They happen time and time again. And I will just show you more examples of this happening so you guys can check it out. It doesn't matter. Let me just show you some examples. So, for example, the one where we had the recent downtrend. So once we broke below this 3900 area, I will draw the base box so you guys have an idea. So we had this major base box, and I had pointed out in the last few watch list videos. Once we broke below this base box, right before FOMC, we had the first lower low here. We had the first lower high here after the FOMC. We had the second lower low here, second lower high here, and then we tried to go in the parabolic phase. That failed once we had this rally at the start of October. And if you guys remember, when this rally started, we were like, all right, this price might go all the way to the 50 MA. Our first reaction was obviously, our first resistance was obviously 380. But at that time, I didn't think about the 21 MA, so I did not think the reaction would be so sharp. I thought we would some consolidate here at 380 a bit and then go higher. So what I didn't know at the time is the first move to the 21 MA after a 9 MA downtrend sees a sharp rejection. We got this rejection. 9 MA could not stop the price. We went lower and retested the recent edges of the box. Then we tried to break below it. That was a failed breakout, which was the scenario 2, similar to what we had here in May. After that failed breakout, we went above 21 MA and we started consolidating. And this is when I was very confident that we'll go towards 390 area. Because once we're above 21 MA and we're consolidating above it, that's the path to least resistance. We'll go to the 50 MA. And that's the story of what we were seeing over the last week for this rally. So these kind of examples pop up again and again on every chart. Feel free to check it out and you will see this happen time and time again. This one, for example, we have this 9 MA downtrend. Price broke above 9 MA, went to the 21 MA, went slightly higher, got rejected, but got stayed supported by 9 MA, consolidates, and then goes to the 50 MA. Now this one, the moving averages are very near to each other, so it's not as clear. But these kind of examples happen time and time again. So let me show you the major gamma squeeze that we saw on Friday, and I'll show you the 5-minute chart for how that played out. All right. So we have this base box on the 5-minute chart that was below 3815. You can, if you guys don't see the base box, let me draw it out for you. All right, that's the overnight base box that was on Friday. This is where Amazon earnings wrecked everything. This is where we consolidate sideways overnight, and then this base box broke out in the morning. So once this base box breaks out, what do we expect? We expect a first 9 MA trend. So we had this once we break out, and we have this sideways consolidation. I think the base box will be slightly lower. No, this is fine. Once we break out, we have this first sideways consolidation. So that's your lower high, lower low. Then we go again. We have a second sideways consolidation, second lower high, and lower low. Price tried to break out higher again after this lower low, but did not work. We came back to 9 MA. We broke below it. We come closer to 21 MA, and then we sharply bounce. And just like in case 1, we have a 21 MA box breakout. So we have another trend. Higher high, higher low, second higher high, higher low, and then we have another form of consolidation. Price comes back to the 21 MA, goes up. In this case, tries to have a failed breakout, does not. It tries to break out, could not break out. That's the scenario 2. Comes back to 21 MA and then breaks out. So you have to see on when the momentum is so strong that sometimes price would not go to the 50 MA. And these are the parts that would confuse me in the past because I would not understand what is supporting the price. But when the momentum is that strong, it's 21 MA box after 21 MA box. Price came back down to 21 MA and went up. 21 MA box one after the other. Another example of 21 MA boxes would be the Ethereum rally that we saw a couple months ago. Yes. All right. So this is the base box. This is the box we had for Ethereum. Oh, the funny thing is, okay, look at this. We had the 9 MA trend finish. Price bounces, gets rejected. 21 MA. That means the chop has begun. When I say now we know the phases of the chop, in the first phase of the chop, after the 9 MA trend, we bounce to the 21 MA. Then we see what kind of reaction it has at the 9 MA. If it does not have a reaction there, it will come back to the recent lows, which it did. Could not break below this box. So we went back above 21 MA. Kept consolidating and then finally moved to the 50 MA and started this trend higher. So once this box broke out, we have the first higher high around 1435, the first higher low here, 1335, second higher high around 1640, second higher low around 1462, and then price tried to break out of this in the parabolic phase, did not work. You have to realize that the parabolic phase only happens 20% of trends. 80% of times we just go into the next consolidation after 2 higher highs and higher lows. So price consolidates, comes back below the 9MA, goes to the 21MA, has a sharp reaction, and then we have a 21MA box breakout. This ends up being a failed breakout. We have a higher high and we just never have a higher low. So price comes back to the 21MA, goes back to the edge of no reaction in 9MA, so goes back to the edge of the recent highs, no breakout, a failed breakout here, comes back to the 21MA, goes back. So we know this is consolidation period, so we have to try and understand how this consolidation period is working out. But 21MA kept supporting price, and then we see another breakout. On the way back, price 21MA had been supporting this price the entire time. On the way back, could not, just because the momentum was so strong, and we came directly at 50MA. So 21MA is the inflection point between the 9MA and 50MA that ends up supporting price or rejecting price quite a bit. And that's why it was the missing piece to the box system, which is why I wanted to bring it out to you. I hope these examples are clear. I hope this made sense, the 3 scenarios. And if you have any more questions, we can discuss them in the chats, and I will add more to the video after.